What's good, everybody? Welcome to the Closing Beat. How's it going today? Hope you're having a good day or trying to have a good day. Woo! We will dig into it here, of course. If you're watching this for the first time, we're financial advisors here with Jazz Wealth Managers. We're not active traders. We're not like short-term traders. What we like to do is do a daily sort of stock market update to let you know how things went. So if you're participating, you've got long-term investments, every now and then you can check in, see how things are going. Those of you that like to trade the markets actively, well, of course, we're here for you. We'll be pointing out things as we go. We're going to talk a lot about the Fed today. I promise not to make this too long. The Federal Reserve, after a lot of buildup, right? A lot of media buildup, a lot of hype, the Federal Reserve raises rates by 1/4 point, and they sort of say, you know, hey, look, here's what we're going to do. We're going to keep plowing ahead unless the data tells us otherwise. So they didn't give investors what they wanted. Investors wanted to see that they were basically going to sit back and wait. That was my prediction. They did raise rates, but they just didn't say they were going to sit back and wait. They said they're going to plow forward. They did say, however, instead of maybe 3, they're going to do 2 rate hikes next year, which could mean that that's not going to happen until middle of the year. Again, they always say, of course, we'll let the data sort of dictate what we do and how we adjust going forward. Now, the Fed is doing the right thing, by the way. Whether you agree or disagree with it, they're doing the right thing by raising rates little by little. If you're just very new to this, you have no idea what's going on, well, basically, the world has had, or the United States has had free money for the longest time now, going back since the financial crisis, 2008. So basically, free money. And that spurs lots of building, lots of borrowing, lots of expansion. And the Fed is sort of saying, hey, wait a minute, we don't want you guys to expand too fast, the economy, or we might crash again, right? That's what happened with housing. Housing went by too fast, and it caused a big crash, right? A scary crash. So the Fed is essentially just trying to slow things down a little bit. They are not trying to crash the market. It does typically happen where they end up slowing it a little too much, if you like studying that stuff. But what they're trying to do is just say, hey, economy, we know you're doing well. Just back it down a little bit. Just everybody take it easy. Don't buy so much. Don't build so much. Don't spend so much. And that's basically what they're trying to do. I had a little fun today. Here's the thing. When Jerome Powell, he's the Fed chairman, when he speaks, the market falls, apparently. The S&P is actually lower every Fed day since he took over, right? Every Fed day. So that's a new record. The previous record was set in 2002 by Alan Greenspan, where 4 times in a row when he spoke, the S&P fell. So Mr. Jerome Powell beats the record now with 7 times when he speaks, the S&P falls, so not really good there. However, they're doing the right thing. Think about it. Many of you have this great plan for the new year. You're like, I'm going to lose some weight. I'm going to quit eating the candy. I'm going to quit drinking the soda. Man, I'm going to get in shape. What's going to happen in the new year when you do that? Are you going to feel good in the first little bit, right? You're going to be pissed. You're going to be grumpy, leaving negative comments and stuff to me because you don't have the candy. You had candy and junk all this time, and now we're going to take it away from you. Think of that as the Federal Reserve. They've just basically had free money. Everybody come and borrow, do everything you can. Naturally, when they start to take that away, just like the diet, take away the junk food, you're going to have some people pretty frustrated. Totally normal, so it doesn't feel good in the process. Now, we've been keeping stats here just to keep you updated. Earlier in the week, Monday, we said 137 stocks in the S&P were lower by a total of 20% or more. Yesterday, we bumped it up to 148. Today, that number bumps up to 150. That's 30% of the S&P 500, down 20% or more. If you like discounts, you have got 150 names to choose from that are giving you a 20% discount. Like I said yesterday, some of you are going to be scared about that. Some of you are going to be excited about that. You've got 50% of the market, of the S&P, is now down, but now down by 10% or more. However, the Fed is going to look at the long-term picture. So if you just started investing here in the last month, you've already lost 10%. Simple as that. 170 stocks in the S&P 500 have fallen 10% just in the last month. 30-day window, right? A lot of it happened here this month, actually, and we're only on the 19th day of the month. So not really good if you just started investing, but the Fed doesn't care about you just getting started. Big picture, the market's still very much just off the highs, not that big of a deal in the grand scheme of things. So I get it. It's volatile. It's a little weird. The media is focused on it a lot more. So it seems scary, but don't worry. We'll get through it. The Dow down by 352 after being up 300 today. Very, very good start to the day. And I want you to look at this chart over here to the right. Look at how the market was higher. The red dashed line that you see on that bottom chart there shows where we finished yesterday. So everything above it would be a gain. Everything below it would be a loss. That's the S&P 500. Above, we spent most of the morning. Everything was cool. And then the big red blip, the first one you see at 2 o'clock, that's the Fed. That's the Federal Reserve right there. And from there, everybody decided to start selling. So S&P finished down another 1.5%. That's a new low. The Dow finished down 1.5%. That's a new low. NASDAQ down 2%. That's a new low. Russell 2000 down about the same, 1.5%. That's a new low also. So the market's making new lows here. I believe now going on 4 days in a row. Let's go over to the charts here. I've talked enough. Let's see something interesting. There's the Dow on the screen, new lows. You can see it there. The S&P 500. If you like looking at these sort of things, you got the S&P 500 now lower as well. There you go, new lows. And then if we go into the different sectors, the banking sector actually started really well. To give you a hint, when I think of something, I write it down. And if you look in the description of this video, you actually see everything. I write it out. I write a full article about what happened on the day. And earlier in the day, I actually wrote, hey, banks are looking good. They finished positive. I try to anticipate what's going to happen. Well, if you look, the banks were actually higher on the day by over 1%. Nice sort of recovery bounce. But after the Fed, they gave all of it back and lost 1.25%. That's 4 trading days in a row that the banking stocks have made new lows. Banking stocks are down 10% just since the start of the month, by the way. If you invested in this on December 3rd, which is your first shot to do it, you lost 10% just like that. So it gives you an idea of how volatile the markets are here in the short term. Also volatile, you're going to have the transportation sector trying to break through some support there. Lost 3% on the day. A lot of that had to do with FedEx. That's a big weighted position in the transports. We'll take a look at that. There's also, I don't know if you guys are familiar with Dow theory, but that is starting to really take effect. That could be sort of negative if that gains some steam there. But for now, FedEx was a big one there. Transportation sector down 15% this month alone, to give you an idea of some of the sectors. The semiconductors earlier today were basically holding there. They weren't doing anything. They were sitting right at lows, and while that's not great, it was better than the markets, you know, what you're seeing with everything else selling off. However, excuse me, after the Fed meeting, they lost 4%. A lot of that has to do with Micron. We'll get to that in just a second. If I could go through different sectors real quick. Oil, little recovery today. It's a little, if you consider how much it lost, right, 10% in the last 2 days, just a little 2% gain is nice, but not really impressing everybody too much so far. Home builders, I believe, had another decent day today. I'm going to just dig through real quick if you'll let me. Nope, they gave back their gains by the end of the day. Actually, everything. You got energy, of course, down by 1%. Home builders, 1%. Banks, 1%. Healthcare, 1%. Retail, 1%. All losses, not gains. Consumer discretionary, emerging markets, the Russell 2000. Communication services, down 2%. Regional banks, down 2%. Transports, 2%. I'm sorry, 3%. Metals and mining, semiconductors, and gold miners down 5%. So it gives you an idea what's going on around there in the broad markets. All of that coming late in the day, so not pretty. If we look at FedEx on the day, very extended here. The gap down mostly, well, all because of earnings. Earnings and revenue were better than expected, but the company lowered their 2019 forecast thanks to weakness in Europe, which we've already pointed out there to you, and slowdown in global trade as well as trade wars. The CEO literally said that it was the politicians' fault. I put it in the scroller exactly what he said, but down there at the bottom. But he literally blamed it on politicians. In the short term, that is very extended. I would keep my same prediction that the markets will recover into the end of the week, and I think FedEx would go along with it too. There's a lot of short-term extension here in the transportation sector. We went through it yesterday to sort of go through. Here's a stock we don't talk about a lot, and actually a positive on the day. You guys might be feeling a little stressed, maybe needing a little chocolate. Hershey's, we have a sort of a scanner set up for upgrades, downgrades that we like to look at. And when there's a double upgrade, it actually comes up with a little rainbow on it. We kind of jokingly set it up that way. So it's a double rainbow, if you're familiar with that. Anyways, Hershey got a double upgrade today, which is very, very rare, actually. It doesn't happen often, so it always catches our eye when it happens. Bank of America, they said the recent investments made by Hershey's will offer strong organic sales and profit going into 2019, which would result in a 10% average return, annual return for shareholders. So they spelled it out for you. They literally just said, invest in Hershey's and you will get a 10% return annually until they change their mind. Their price target is now $120. Isn't that interesting where they put their price target? Micron Technologies down 8%. That's all earnings related. Revenue came in a little light. The company forecast guided forward to say that everything going on now will come in a little less than expected. So if you follow earnings and that sort of thing, Wall Street had a prediction. Micron said, hey, you guys are a little high on that prediction. And Wall Street was like, oh, okay, sell the stock, right? They don't like that. Oversupply, that's the big issue right now, oversupply of those memory chips. Apparently, if you need to buy memory chips, now's the time to do it. Maybe there's a lot of them, you can buy it cheaper. We'll see. A couple other things, I don't know, I want to point out something good today. General Electric higher by 5.5%. They're going to IPO their healthcare division. They sort of tried to sneak the IPO through. They did it confidentially, but it still gets out that they filed confidentially, so it's not really confidential. It's messed up how it works, but General Electric added 5.5% on the day. Tesla, if you want to take a look, Elon Musk showed off his new tunnel underground there. That's pretty cool. I mean, I wish him well on that. Facebook down 7%. Just when it was starting to break through the downtrend. That is an official broken pattern. If you're a technical trader, you run from that. There'll be no technical interest in that stock. The only reason the bulls will show up again is if for some reason tomorrow all of today is erased. If that does not happen, then you would not expect much out of Facebook going forward. They got a ton of problems, man. I think the Washington Attorney General sued them in the middle of the day as well, in addition to the data that they were apparently giving away without users' permission, despite them saying they didn't want to give their data away. It's a mess. General Mills, earnings good, revenue good. They're charging more for food. You guys don't mind? You're buying their cereals and all their products and everything. Stock was higher by 5%. Would have finished up a lot higher if it weren't for, the dreaded little market there. And then Bitcoin, I'll point it out. Bitcoin up 4% on the day. That's like a 2.5-day rally for Bitcoin if you're following it there. Is it coming off the lows? Honestly, personally, I could care less, but I know some of you do care. And, you just try to cater to everybody. You say something nice, you hit the subscribe button, you help people out, you hit the subscribe button, You know my goals. I'm not trying to have 1 million subscribers. I'm trying to have a lot of subscribers so that I could go speak to the industry in all of the advisor conferences, all of the financial professional conferences. I want to speak about how you guys care about your retirement investments more so than they give you credit for, and I want the data to prove it. So if you hit the subscribe button, we can use your data, which we will. Just not like Facebook. I'm going to tell you. I'm going to use the data, but I will take this camera with me and I'll try to film it live so all you guys can participate as well and help kind of prove to everybody how it goes. Look, I'll say one more thing and then I'll answer questions if you have any. This is the market you buy. If you're a brand new investor, you're not having much fun. I get it. Like it's not cool. If you started in October, you saw nothing but losses. No matter what you bought, you saw losses. There's not one person out there that magically picked the right stocks that are only going higher while everything's going lower. Don't kick yourself. If you said in October, I'm going to learn how to invest in the markets. I'm going to learn how to trade. I'm going to learn the short term, the long term. I'm going to dig in and learn. This is the best time for you to learn, but you're not having a good time, and that's okay. If you're a long-term investor, I'm going to say this for the rest of the week. Everything else on the planet, you try to buy at a discount, right? Doesn't matter what it is. You want low gas prices. You want the car. You want to negotiate for 8 hours at a car dealership to get $100 or whatever you get off the price of a car. You want a discount. Nowhere else on the planet do you ask for higher prices before you'll buy. I urge you, if you have 401ks, other workplace plans, retirement accounts, I urge you to take advantage of this. Don't run from it. I'm going to pull all of you kicking and screaming. You guys are going to make fun of me in the comments section. Someone's going to have something negative to say. That's the kicking and screaming. But I'm going to pull all of you along for the ride. We will come out the other side. And to be honest, this is kind of just getting started. So I might say it a lot, but the market pulling back as it has, it's really not that big of a deal. But I know some of you just got started, and that's a quick drop to witness as just getting started. If you invest in something, you lose 1 or 2%, you go, that's part of the deal. If you invest in something and you lose 10%, you know, I could certainly understand a little concern there. I understand. Is the Santa Claus rally coming? Santa Claus rally. I hope he's wearing green this year because we're going to need it. Look, I'm not telling you what to do, but I am saying I think the markets will recover at least a little bit into the end of the week. How next week goes is typically really quiet. It is typically green. If Christmas Day falls on a weekday, the day after, the 26th, tends to be a positive day. Very quiet day, but a positive day. So we'll see what happens there. Mass Effect remembers being a subscribe. Why does it say hide? Like it's like wanting me to review that comment. You can share that comment, of course. There you go. So it looks like most of you guys are on the same page. You know what I mean? And that's great. I talked to a few customers today that were cheerful earlier in the day about the markets possibly falling. They believed that the markets would fall after the Fed meeting, and it was a good guess. They did. But I talked to a few people today that they got it, you know, and I love that. You understand where you're at and what you're going to do. Sorry for the noise, by the way. It's like raining like crazy here down in Florida today. It's cold and it's raining. All right. Love it, Jose. I love it. I love it. And I've gotten emails from some of you where you could tell you've got the right attitude. And if you can keep it, that's the trick. If you can keep it, you'll be just fine. If you start getting a little shaky and you need someone to talk you off the ledge, let me know. I'm happy to help. But if just stick there, stick with it. You'll get through it. Don't run away from your 401k either. I know I'm the financial advisor. I'm supposed to say, come to me and let me manage. No. If you need us, that's great. But if you're in your 401k or something's going well there, just don't run away from it. Just keep going, right? Keep plugging along. You will get there. You will enjoy the dip as it comes. So anyways, that's all I have for you, actually. So we'll do this all over again tomorrow. I really appreciate you guys joining us for this. And if I can help you in any way, you know where to find us. Enjoy the rest of your day or evening, and we'll see you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.